Welcome back to the show. Let's talk to Tim Gregory, Chief Investment Manager for Vermeer Investment Management Ltd. Morning to you, Tim.
Morning.
Read in the FT recently, our good friend, Mr. Beckett, Tom Beckett of Sigma, said he'd removed Japanese equities from his portfolio over concerns at the prospect of them performing poorly if the yen strengthened further. Now, given the geopolitical tensions, I would imagine there's going to be more strength in the yen as a headline. Okay, you've always been very bullish on Japanese equities when we've spoken before.
Sure.
What is your thinking right here, right now?
Well, Japanese equities, we think, are very attractive in the long term. I think the big thing with the Japanese market is at the headline level, there is a lot of companies are exposed to the strength of the yen, and the yen has become a risk-off currency. So on a morning like today, where we see North Korean tensions building again, the yen has strengthened again, and the Japanese market is down. But what we see in Japan are more individual opportunities to invest in what are some great companies with great cash flows, phenomenally strong balance sheets, and a big corporate cultural change that's occurring in Japan, whereby they're becoming much more shareholder friendly. And we see some great technology opportunities in areas like factory automation, which has been a great theme this year. So we tend not to be looking at Japan saying, do we think the TOPIX or the Nikkei index is going to outperform? We're looking at special themes within Japan that we like, some individual companies that we like, that have led us to be overweight the Japanese market, and despite concerns over the strength of the yen and full acknowledgement that if the yen moves up strongly, the Japanese stock market overall will struggle. But there have been good returns to be made from individual Japanese equities, even if at the headline level hasn't made that much progress again this year, and the yen is a big factor in that. But we see for the long term big opportunity still.
Right. So in terms of sectors, somebody's watching the show for the first time thinking about investing in Japan, is there a sector that you like or a theme that you particularly like?
There are two particular themes that we like. As I mentioned, factory automation. We're seeing an enormous growth in robotics and factories moving to more driven by robots and machines rather than enormous use of the labour force. So we think that that is an emerging theme. It's been a very long, poor cycle for capital investment. And actually, we think that's only just starting to improve. And the Chinese are moving very strongly to much more heavily automate their factories than they have done in the past. And we think it's a lot of Japanese technology companies that are going to lead the way in that. And the other thing that we really like, actually, in Japan is that tourism has been growing very strongly. And we're seeing a lot of Chinese visitors to Japan these days. That's a strongly growing market. Obviously, it's quite close geographically, and it's a really beautiful place. And people, obviously, we're seeing very strong growth in that. And we've been investing in some themes that follow that as well.
Tim, thank you very much indeed.